Hello, folks. Brandon Chapman with you today. It's another Monday video for TheoTrade. It is March 4th, 2024. And this is why Nvidia is the only stock that matters. We're going to talk about dispersion and correlation. We're going to look at areas of strength right now. You'll see financials over here, big cap tech names, utilities kind of leading the way today. But really all that matters right now is, of course, Nvidia. We'll talk about why Nvidia is becoming increasingly in focus and why it's creating potential instability in the market when specifically call volumes start to decline. The downside may begin to be realized. Nvidia did pare its gains on the day from the high of the session. But let's get back to the S&P 500. So we'll look at the ES, for example, today. And the ES ultimately basically finished flat on the session. Look at SPY on here, down 0.11%. We look at the intraday trade today, and you'll see a bit of selling in the last, 20 minutes or so of the market, 40 minutes or so of the market, gliding into the close. As you look at Nvidia, again, Nvidia similarly around that same time, around the last hour of the market, began to see it selling, and after hours here, seeing further selling in Nvidia. Why is Nvidia so important? It's a $2 trillion company. It's gained about $600 billion in market cap since its earnings. But it still, is it bigger than Apple? Is it bigger than Microsoft? Why is Nvidia the penultimate? We talk about stocks today. In the Highlander movies, there can be only one. And Nvidia right now seems to be the last man standing in this dispersion environment. Now, what is dispersion? You've probably heard of correlation, how in sync companies are in terms of their up and down moves. Not necessarily trending in the same direction, but moving up and down in tandem, and you can measure the degree of correlation. But dispersion basically means that some individual components are contributing more than their percentages allocated within the fund. So if Microsoft has a certain allocation in the S&P 500, how much is Microsoft adding to the performance of the market, generally speaking, in the S&P based on its weightings? Nvidia right now appears to be moving a lot more. So, for example, it's up 3% today. As we look around at the periphery, let's look at some of the other big cap tech names, namely Apple. Apple was down 2.5% today. Google was down 2.8% today. Microsoft was up for a moment, finished down about 0.14%. As we look at Meta ended up finishing down about 1%, 0.8% today. Amazon ended up finishing down about 1/3% today. So when you think about these components and you look at the performance of the SPY, for example, ultimately, most of these companies are down, right? These big cap, the most heavily weighted stocks in the S&P 500 are down, and yet the S&Ps perform better than those stocks, in part because of why? Nvidia, a $2 trillion company, up 3.6% today. It's impacting the market disproportionately when you compare its actual weighting. And as you look at what's driving Nvidia, this dispersion type trade, I know Don's talked about it with our members and videos as well, but all we got to do is look at, for example, next week's vol curve, right? So we look at next week's volatility curve. What do you see is different for Nvidia compared to other stuff? And this is leveled off just a little bit from when I looked at this earlier in the session, but the call volatility is rising out here, right? Look at the put volatility. The put volatility is falling. It starts to bottom out down here at about 840, and then starts to rise again. But the idea of what's happening is they're basically what? We're selling puts and we're buying calls. Okay? Selling puts and buying calls. This makes those out-of-the-money calls increasingly more expensive as you go higher in price, and it makes the puts decline in price relative to implied volatility as you move out of the money on the put side. So we're selling puts to buy calls. And again, this is a trade that's fueling, and this is a trade that we can just keep resetting as long as it works, right? This form of dispersion. Frequently you see dispersion on the way down. Certain companies are leading the way in terms of the downside, right? We're selling calls and buying puts. And again, in this case, we're selling puts and buying calls. And this is leveled off a little bit into the close. But notice the volumes that we're seeing today in Nvidia. The volumes today are about 1.2 million contracts traded, and that's about 2 times the 5-day average. Well, how does that compare against a product like the SPY, the most actively traded product, right? We finished out about 3 million calls traded, and about 1.8 times the average. So we're seeing is that this is a significant amount of call trading that's taking place in Nvidia. And as we look at the ratio to calls and puts, we're seeing basically 50% more calls than puts. You can look at the put call ratio down here, about 0.65. So we're seeing a lot more calls traded than puts. And this here is the key, right? You've heard of gamma squeezes, etc. But the notion here is if we're predominantly selling puts and buying calls, you don't see this because a lot of this is occurring between the market. If we're on the margin selling puts and buying calls, in essence, what we're creating is an environment where this creates a positive feedback loop where buying increasingly more calls forces the market makers to hedge, which they're selling calls and they hedge through buying stock. And we get this positive feedback loop. And sometimes you see the combination of high short interest and significant option activity, like an AI, for example, or a sound hound, these types of things where you see option activity parlaying into a short squeeze that further drives the stock. And so again, these companies are not great companies, but what they represent is the state of the market right now. In my session earlier today, I talked about this is the front lines of the market. You got to decide whether you want to be on the front lines or not. However, I mean, the idea of Nvidia, and right now, again, the skew has come off a little bit from this morning when I looked at it, but you could frequently buy out of the money call spreads. We've talked about this before in this exact video on previous weeks, but the idea is you could buy the lower strike and sell the higher strike, and you could construct a spread that has a little bit of an edge to it. The edge has come off a little bit for 10 days. We're not quite as skewed as we were, but the idea that you could buy a call spread and have skew move in your favor really says where we're at, that they're buying these out of the money calls, and it's really causing the volatility to rise on the out of the money calls and begin to fall as you move towards at the money and then out of the money, the put side. We're selling this side to buy that side, right? This is something Don's been on top of for a while. But again, this is kind of the idea why all of a sudden Nvidia is becoming increasingly more important, and that a 3.6% upside in Nvidia is more important than Apple, which has moved down today about 2.5%, and Google, right? It almost virtually offset the losses in those two stocks just because of Nvidia's size relative to Apple and Google and its appreciation today, which at one point it was up over 4%, which is astounding given the fact this is a $2 trillion company. Now, we faded from our high. Are we starting to see some cracks in the foundation? We saw that kind of happen here post-earnings, right? We drifted for a few days, and then all of a sudden on Friday, we saw it really kind of take hold, and then again today. And then you look at gold and Bitcoin, for example. I mean, gold today was up 1.6%. The S&P was down 1.1%. This is masking a significant amount of weakness that's in the market. Why is gold higher today the last couple of days? We are seeing profound weakness in the US dollar. Now, where you're not seeing that weakness is by looking at the DXY, for example. The dollar index is the relative value of the dollar. It's the dollar relative to the euro, predominantly 57% weighted. Euro's up a little bit. US dollar / JPY, dollar yen. Basically, the dollar's up minimally against the Japanese yen. We're in this very tight range the last couple of weeks. We could look at the Aussie / US dollar. Is there much movement here? The answer is no, right? In fact, the dollar strengthened a little bit vis-a-vis the Aussie, which is something that Blake and I were talking about in our Wednesday at the close. The New Zealand dollar against the US dollar. Again, dollar slightly stronger. The Canadian dollar, US dollar CAD. The dollar CAD, dollar strengthening against some of these commodity currencies. So the dollar itself is kind of treading water against the global currency space. But again, remember that this does not represent the value of the dollar. Gold is a much better representative indicator since you're buying gold with dollars. Okay, it takes 196 US dollars to buy one share of GLD, and this has gone up $6 or close to over 3% in the last 2 days. And again, the S&P has basically been treading water today. And so we take a SPY versus gold ratio, SPY plus GLD, and we see right now that if I bring up the pairs ratio study, I can do a relative strength line. What we see is that over the last couple of sessions here, the gold is strengthening significantly vis-a-vis the SPY. So just look at the scale over on the left-hand side. We've gone from about almost 2.7 over the last several sessions down to 2.61. The dollar is weakening in real terms. And of course, that's helping the S&P 500 hold up, or at least give the appearance that the S&P is holding up. We look at the last couple of trading sessions, you're thinking, well, the S&P is moving higher. We just broke out to new high. Yes, in dollar terms, we broke out to a new high on Friday. But in real terms, we're not even close. We're actually down here in real terms. Once we strip away the effect of the US dollar, what impact does that have on breadth? Well, again, one way we can measure breadth is correlation, right? So for example, let's look at the S&P 500 and Apple. So we look at SPY versus Apple. And what I'm going to do is I'm going to come in here and you'll see that the S&P has been significantly outperforming Apple over the last, since its earnings, since the end of January. Well, let's bring up a correlation study and see how correlated Apple is to the S&P 500. Pretty simple thing, right? Let's click OK. And what we'll see is, I'll bring up Apple just by itself, right? Apple is now negatively correlated to the S&P 500. Did you ever think it was possible? I mean, when was the last time we saw a negative correlation? September 19th of 2023. This was during a particularly weak time for Apple as well, but let's go back further. Let's go back, favorites, we'll go 5-year daily. When was the last time we saw this negative of a correlation? We would have to go back to, for example, December 1st of 2021. What was the S&P 500 doing about that time? The end of 2021. So we go back here, December of 2021 right here, for example, right? The S&P was going lower as Apple apparently was going higher. So the notion is that, look, I mean, right now we're seeing that Apple has a strong negative correlation. And the most recent period of time where Apple had this negative correlation was right here. It was around the 27th, 28th of last year. So we look at Google. So we'll get Google, for example. Try this again. How about Google? Google has a very significant negative correlation. Again, not since we saw, for example, the beginning of December. Okay, after more of a sell-off in the market, then we started to rally off the low. Go back to December, for example, of 2020. Okay, saw this little consolidation phase, and then we began to take off. We look at, let's take a look at Amazon. Amazon's maintaining almost nearly a 1 correlation in the last 10 days with the S&P 500. We look at Microsoft, MSFT. Microsoft has increased its correlation over the last several days, near a 1 correlation against the S&P 500. So we're seeing that some areas are becoming increasingly more correlated, and yet some areas of the Magnificent Seven are fading in its correlation. So we'll have to watch and see. Do we start to see the correlations fade with some of these other names as the shine comes off? Nvidia right now, how does its correlation compare to the S&P 500? So we look at it right now. It's 0.97, almost a 1 correlation. And again, we see this, right? But correlations generally within the Magnificent Seven, Magnificent Eight are beginning to break down. And again, we'll see whether or not the breadth, right? Netflix has been increasing its correlation about 0.86. Again, if we start to correct here, right? We start to see, again, the lack of breadth amongst these mega cap companies. Do we start to see the luster come off the S&P 500? Again, eventually they will succumb. But right now, the Nvidia trade is what? Buying calls, right? So we start to see the call activity begin to diminish. This is where we know this trade, or this dispersion type trade, is beginning to show its signs of age. And as of right now, again, almost 2 times the daily volume, 5-day average volume and calls on Nvidia, 1.9 and puts, by the way. But again, we're selling puts to buy calls in effect here. Again, once we start to see the call volume start to dry up, then we know that this trade that's forcing increasingly more emphasis on Nvidia, making it the only stock that matters right now in terms of the bigger direction of the broader market. We're going to focus on call volumes. Now, the Nvidia trade did pick up some participants here. Intel was up 4% today. Let's look at Cisco. This was up about 1.5%. I'm going to go back to a daily chart here. Intel is kind of increasing its correlation, not a high correlation the last 10 days with the S&P 500. Stock was up 1.5% today. We're coming off lows down here, and we're looking at what's the possibility, 51, maybe 53. Today's trade in Cisco was an 8 March 49.50. So we come in here to the 8 March expiration, 49.50 strike. We're seeing again a gamma level here, 49.50. If we take that out, this could push the stock higher, 51, maybe even back to 52.5, back to prior highs. Another larger cap name in this space is where is it? I'm trying to find it here. Well, another technology name, ARM, down today. But the trade today in ARM is an 8 March expiration. And we just scroll down here a little bit, and you'll see that the 190 strike, way out of the money out here, 20,000 contracts. Again, high short interest stock. Can we produce that gamma squeeze that might drive it to 190? Low probability, but again, you can see the interest building in this that may help create. Once we break, we'll see that the pedal hit the accelerator and drive ARM. Again, this is in that periphery of Nvidia as well. IBM today up 2.5%. It was the 5th best performer in the S&P 100. Again, we kind of gapped up on the earnings, saw the lull. We're kind of testing that prior high, maybe forming a little bit of a little cup and handle formation if we break through. But today's trade in IBM, again, an 8 March expiration. We're really kind of driving these near-term expirations here. And at the 205 strike, 5,000 contracts mostly bought. And again, upside potential in IBM to 205. And again, this may just be the beginning if we start to break through these levels and we continue to drive in IBM. But again, right now, what are we looking for? Some of these big cap tech names, just a little bit of follow through. You could probably throw Intel in that as well. Just looking for a little bit of follow through in the next several days. Similar to what we saw last week with MU and WDC, where we had significant call activity last Monday. And for the most part, those stocks had pretty good weeks this week. Last Monday, we looked at stocks like MSTR, right? Again, these companies that are in this dispersion universe with Nvidia, driving them up sympathetically. We had SOUN. I talked about last week. Again, had another squeeze higher for another day before backing off. AI as well had a nice big breakout. These were all Monday setups we talked about last week. But again, we're seeing it this week with some of the bigger cap tech names moving to some of those names versus the kind of those smaller names in this AI space and crypto space. As we think about gold today, Newmont, NEM had a nice day, up 5.6%. As we looked at gold, was up nicely. Newmont, the trade today, Newmont was a Jan 26, was way back out here, 2026 at the $60 strike price. It just reflects kind of that optimism that there is out there looking for big upside moves in gold stocks. Agnico Eagle Mines as well, big breakout today. And this is an April expiration here for April, the 55 strike right here. So again, we're looking at call activity coming in, looking for big upside moves in gold. And again, as you know, I've been bullish on gold for several weeks coming off the lows here, previously back at this point. And so this breakout allowed my spread that I've held on for a while. Then I rolled to get in the money. I closed on Friday, rolled it to a 196, 198, looking for a continuation of this move in gold as the dollar continues to weaken, as the dispersion in the market increases, as correlations break down. And interestingly enough, volatility is not picking up yet, but skew, we're seeing skew continue to edge higher. On Friday, it finished at 150.42. We'll see where we finish. I'm expecting skew to probably continue to rise as we're seeing increased hedging in case of a market volatility event. And again, it's going to take the call volume is very likely to start to pull back on Nvidia to probably get that bigger correction. It's going to come. It's just a matter of when. So as we look at the broader market and we see today, we kind of lost a little bit of steam. Just remember, a high skew environment means a higher frequency of small up days as the crash risk builds. And again, we're keying off Nvidia as the only stock that matters in the current market. But anyway, we'll kind of wrap it there, folks. We'll catch you back